Would it be fair to say that silver is doing something remarkable every single day right now? Maybe not every single day, but what we are witnessing goes far beyond ordinary price movement. This conversation isn't only about where silver is trading today, it's about what's happening underneath the surface and why this moment feels different compared to the past. Naturally, price still matters. In fact, the two most important prices are always the price you pay when you enter and the price you receive when you exit. That never changes. But silver is increasingly proving that it belongs in the same conversation as major asset classes, not just as a speculative metal, but as something far more significant. Over time, it has shown that it can compete and sometimes outperform assets that most people would never think to compare it with. In a recent discussion, I mentioned how silver briefly moved ahead of Apple in terms of market capitalization. As I'm recording this, silver is sitting just slightly behind again, but that gap is small enough that it could easily flip once more by the time you're watching this. Markets are unpredictable, and silver has become especially volatile. That volatility cuts both ways. At any moment, we could see prices move sharply higher or experience a healthy pullback. And yes, a pullback would be normal. In fact, it would be healthy. Markets that rise too fast without pauses often create instability. But even if we do see a correction, it wouldn't erase what silver has already achieved. The broader trend and the structural forces behind it remain very much intact. When we step back and look at silver's recent price history, the pace of this move becomes impossible to ignore. Charts and data clearly show a dramatic acceleration. One way to understand this is by looking at how long it took silver to move in $10 increments. Silver took roughly 145 days to climb from $20 an ounce to $30. At the time, that felt like a major event. $30 silver was considered a psychological barrier, and many doubted it would hold. Yet it did, and not long after, silver continued its climb. Another similar period followed, where silver moved from $30 to $40 over roughly the same time frame. That was a steady, disciplined rise. It didn't feel rushed, it felt controlled. But that was only the beginning. Then the tempo changed completely. What had been a steady climb turned into a powerful rally. Silver moved from $40 to $50 in just 39 days. That alone raised eyebrows. It was fast, aggressive, and clearly driven by more than short-term speculation. After that, things accelerated even further. Silver jumped from $50 to $60 in just 12 days. Then, in only 13 days after that, it surged from $60 to $70. That kind of move is rare, especially in a market as large and established as silver. Now here we are, trading above $70, hovering around 71 and beyond as this is being recorded. This is not a small move, it's historic. And while corrections are inevitable and even overdue, the bigger question isn't whether silver will pull back, but what happens after it does. With the holidays here and Christmas just around the corner, trading volumes are lighter, which can exaggerate price movements in either direction. We could see profit taking, we could see sudden volatility, or silver could surprise yet again. This market has done that before. What's important to understand is silver's position in the global asset landscape. At a minimum, it sits firmly among the top assets by market value. It may even climb higher. Only gold clearly stands above it, and gold has held that position for generations. But what's fascinating is that many of the largest companies and assets below gold rely heavily on silver to function. Silver is embedded in modern life. Technology, energy, electronics, medical equipment, solar panels, all of these depend on silver. Even assets people assume are disconnected from physical commodities are in reality deeply tied to it. That alone tells you how important silver truly is. Another critical signal right now is the gold to silver ratio. As I record this, that ratio has dropped below 63 to 1. That's a meaningful shift. Historically, when this ratio tightens, it suggests silver is gaining strength relative to gold. We are now approaching levels that indicate silver is no longer lagging, it's leading. We are also very close to a moment many silver investors have waited years for, silver reaching a true all-time high when adjusted for inflation. Nominal highs are already being broken, but inflation-adjusted highs carry far more weight. And in this market, those records could be set at any time. Hours matter, not days. Of course, caution is still warranted. A pullback could happen at any moment. If it does, that doesn't mean the trend is over. In fact, it may strengthen it. Markets breathe, they move in cycles. What matters is what's driving this cycle, and right now there are far more forces pushing silver upward than pulling it down. Supply remains tight, demand continues to rise, industrial usage isn't slowing down. At the same time, geopolitical tensions are adding uncertainty to global markets. Trade restrictions, export limits, and supply chain disruptions are all playing a role. China signaling tighter controls on silver exports alone could have long-term consequences that aren't fully priced in yet. On top of that, we're seeing increased movement of physical silver between major exchanges. Vault inventories, delivery pressures, and shifts in where physical metal is being held all point to growing stress in the system. When physical demand tightens, paper markets eventually feel the pressure. Another notable development is the growing number of large private buyers stepping into silver. When influential investors begin accumulating physical metal, not derivatives, it sends a powerful signal. These buyers aren't chasing short-term gains, they're positioning for something longer term. At the same time, short positions in silver have been losing ground. Some major institutions appear to be reducing or even reversing those positions. That's not a small detail. When sentiment shifts at that level, it often marks a turning point in the market structure. There has long been debate about whether silver has been suppressed in the past. While opinions vary, what's becoming increasingly clear is that whatever forces held silver back before appear to be weakening. The market feels different now. The price action feels different. The reactions feel different. Even a modest new catalyst, something unexpected, could be enough to trigger the next leg higher, and that's what creates suspense here. Not hype, but possibility, the kind of possibility that markets rarely offer without warning. None of this means prices will move straight up. They never do. Volatility is part of the process. Fear and excitement will alternate, but the underlying story hasn't changed. If anything, it's becoming clearer. Silver is no longer reacting, it's leading. What happens next may not unfold overnight, or it might. That's the nature of this market. The only certainty is that the coming days and weeks will matter more than most people realize right now. I'll leave it there. Let me know your thoughts. Thank you for taking the time to watch, and I truly appreciate your support. Please like, share, comment, and subscribe.